Hi, thanks for joining me on my market report. My name is Mike, and if you're new to my channel or my videos, we make videos on mortgage rates, what impacts them on a daily basis, whether it might be something from the headline news or economic calendar, or it could be even geopolitical. And sometimes if you're on the sidelines, it could be something that good news appear to be bad news and vice versa. And we kind of go into explaining that for you folks as a way to uh, give you a little better understanding of what's going on with the markets here. A little bit about myself is I am a loan officer. I do work with a national lender. We do loans in all 50 states. We're here to help you guys out, whether if you're looking to refinance or purchase, or if you guys got questions about things, whether it might be something from mortgage rates out there, or maybe about mortgage programs available out there, or what have you. If you think it's something we can answer, please feel free to reach out to us. Best way to reach us is through the social media site that you found us, and then we can work from there. So without further ado, why don't we jump right into the report here today? We'll start with the economic calendar. This calendar here doesn't really provide a lot of information for today. So we'll start off with this other one. I just did a screen print and then did a highlighted the basic things so it's a little bit more clear as to which items to kind of go over. But right now we'll start off with a personal income for the month of November. So in October it rose a 0.5%. Forecast come for 0.4% for November, and it came right at expectations, which is good news that people are making more money. We'll move a little bit further down because I want to cover a little PCE altogether versus breaking up by this one here. The November outlays are also known as consumer spending. So in October, consumer spending went up 1.3%. Forecast was calling for 0.6% in November, and it came in higher at 0.6%, which is good news. However, they are making obviously spending a bit more than what they're making. Now, PCE, we'll go with this one right now. PCE is the Fed's favorite for gauge of inflation, and the Fed looks at more or less the core, not the headline one, but the core, and we'll touch on the differences between the two in just a second. So let's go over the month over month or the PCE, which in October went up 0.6%, and it continued that same trend at 0.6% for the month of November. So its year over year jumped from 5% all the way to 5.7%. So as we can see, when we go out to the gas tanks and gas stations to the shopping and everything else, we see our prices jumping up quite a bit. And, well, this is inflation to the consumer level and a very important role what we're seeing here. Now, here's the PCE, core PCE, month over month. And what the difference is between core and the regular is that it removes or excludes any food and energy. Those are two variables that we don't have any control over, so they remove those to create a basis. And this is what the Fed will look at, or they'll call real inflation. There's two different inflation for consumers. There are CPI and the PCE, but the Fed looks more closely at the PCE for its gauge for inflation. So its month over month in October went up 0.4%. Forecast was supposed to be at 4.4%, and it came a little bit higher at 0.5%. So its year over year jumped from 4.1% with a forecast of 4.5%, going all the way up to 4.7%. So we had a pretty big spike there in the month of November, which is obviously not good news for us. Obviously we like to see us making more money. However, we're paying a lot more. We're dishing a lot more out. Now let's move on to durable goods for the month of November. So it dropped in October by 0.4%. Forecast was supposed to go up 1.6%, and it jumped up 2.5%. Now, if you take out big ticket items like transportation, it went up a 0.5% in October, and forecast was calling for 0.6%, and it came a little higher at 0.8%. So this is obviously very good news that the big ticket items aren't skewing the numbers too much here. So we're still getting a pretty healthy dose in durable goods. Now, jobless claims we get every Thursday. It went up 206,000 last week, or the last week's number, which is the previous week. Forecast for last week was 205,000, and came in expectations at 205,000 people applying for unemployment percent benefits here. Now, we also got new home sales for the month of November. So, October we had 745,000 people, 745,000, not people, I'm sorry, new home sales, seasonally adjusted units in the month of October. Forecast count for 770,000, and it actually dropped a little bit down to 744,000 in November. So instead of going upwards, it dropped a little bit. So obviously not very good news right there in that terms here. Now, consumer sentiment did jump a little bit. It went from 70.4 with the forecast of keeping unchanged for December, and it went up to 70.6. So decent numbers right there. Good news. And let's go back and take a look here at the other stuff here. So here's the mortgage-backed securities. This will kind of give us what's going on with the headline news. This week, we're not really going to touch too much on the markets because we got very illiquid because a lot of the big hedge funds guys are already gone away for the holidays. So we got very little money in the markets right now, so the volume levels will be down. But because of that illiquidity, some of the smaller investors could create little spikes here and there in positive or negative territory. And so it may seem like it, but it's not really doing that much with the markets here. So we'll create a little bit of volatility here. Right now, mortgage-backed securities are down 11 basis points. Will translate to pretty much most lenders are coming at a little worse pricing because it was actually down a little bit earlier, a little bit further. So most lenders have already come out with worse pricing, and it looks like this could be what will remain to stay because market is just about to close here right now because it's closing early today, 11 o'clock Pacific Standard Time, and I'm seeing that till about 11:01 right now on there, but sometimes it comes out with a little delayed where it's really at. So like right now, it just came out -9 basis points. So here's how it kind of looked like today, where we shot upwards, then we shot way down here, and it kind of worked its way back and kind of been steady since basically about around 8 o'clock. It's been kind of steady, pretty much almost across the board here, right around the 8-9 basis points range here. So that's the mortgage-backed security. So yeah, price is going to come in probably a little bit worse today as a result. Let's take a look here, and then yields been kind of in this range here too. It looks like it kind of just went up above this, not a technical level, but maybe even the 25-day moving average, and work its way up to about 1.493. So just a hair over the 120 or the 25-day moving average at 1.49 right now. And then last but not least, we'll touch on what's conforming loan limits or conforming loans at 3.25% and 2.5 30-year and 2.59 on the 15-year. Those are conforming loan limits, average rate in the country, and they do have points built into them. So they're not like a no-point loan. These do have some points built into them, and these are the average what's out there. And if you guys want to know what a lot, as you know, if you've been following my videos, we've talked about how no one rate fits all people, and there's a lot of variables that go into factoring rate. So if you're interested in getting a rate, please feel free to reach out. We're here to talk to you guys about your refinance or purchasing deals, and we could certainly quote you some rates, what would fit you for what you're looking for, what you're looking to do, whether it's a buy or purchase, or buy or refinance. We can certainly help you guys out with those. All right, folks, if you guys like these videos, please smash that like button. It helps us out. We greatly appreciate you guys. If you guys, as you may know, tomorrow is a holiday, so the markets will be closed. There won't be any videos. Our next video will come out on Monday. We'll look forward to see you guys on Monday. Thank you so much, and I hope you guys have a very Merry Christmas. And again, we appreciate you guys. Have a wonderful holiday season. Bye-bye.